Hello, everyone. Steve here, and tonight we are going to go over the investor update for June of 2022. Thank you so much for listening in. As a reminder, on July 3rd, you can see there on the square at 7:30 to 8:30 Central Standard Time is when I'm going to have my investment advisory board meeting. We're going to cover what happened in the second quarter. We're going to talk about what's projected to happen in the third quarter, and then the rest of the year, and then on into 1 to 3 years and 3 to 5 years after that. As a reminder, we do have some elections coming up. So I talked about them briefly in the morning show today, but that is going to be a catalyst for the market. I think you can pretty much one for one assume which way the catalyst will be depending on the outcome, but that's a topic for another day. But let's go back to reviewing our month of May, and then we will talk about the new share price. Many of you have expressed interest in buying more shares. Well, good news, kind of. The stock price went down based on the volatility in the market. So the good news, if you're buying more shares, is you're going to get more shares at a cheaper price. Obviously, if you're not buying more shares, then it's bad news because it fluctuated. Also, we're at the point, we're coming up on the 1 year point for many of the original investors. If you choose to redeem your shares, simply let me know, and the company will buy them back one for one at current share price, take the profit. You're still in the profit zone if you bought at the initial price. Yeah, you take your profit and move your capital on. There's no judging, no harm, no foul, and we'll go from there. We did sell some more shares this month of May. And so now we're up to, I don't know the exact share count offhand, but you saw it in the operating agreement. I do intend to sell up to that 1.11% of the firm, and then I think I'm going to withhold 20% for the 2 board of director seats and wait for 2 people to come on board for that. I'm at an investing conference right now. We'll talk about some of the stuff I've learned, but I really do think I need a board of directors of at least 3 of us to be able to carry this company forward to either the selling the company or the IPO. So that's kind of what I'm thinking for playing that. But overall, for you to know now, if you want shares, there's more available. If you want to sell your shares, again, no harm, no foul. I'll buy them back from you as the company. All right, as far as the standard disclaimer, here you go. Please pause this and read it. The presentation is by me, the managing member of Ankerstar Wealth. And again, your partnership in the LLC is much appreciated. But these are my projections and mine alone. So you take that with a grain of salt, right? So I've tried to be as unbiased as possible, but all humans carry bias. So just realize that. These are all forward-looking statements. Some of them going out all the way to 2029 and beyond. That is what the formula is based on for the share price, forward-looking valuation. So do your own due diligence before investing, and pause if you need to read the full thing. Okay, here's the new share price, 102.50. Last month it dropped from 118.09 all the way down to 104.55, and it continued to fall all the way down to 102.50. So what's going on? Let's get into the math. You can see the formula there. That's accurate down to the 3rd decimal there on the share price. But if you look over to the left, here's what happened, right? So starting last summer in July, nice gains, 8.5%, 7.5%. Measly gain of 1.5 and then off 6.6%. So things jumped there fairly quickly. Obviously, in March of 2022, we had a sizable jump of 5.0%. That's what took the shares from 110.93 up to 118.09. Then we had a horrible April. I did lose a client in April. I've had some pull money out in May as folks aren't completely rolling over, but they're taking money out and buying real estate with it at all-time highs. Anyway, but folks, they need money out of their accounts, so they're taking money out. So this is the time to put money in because you're getting shares cheaper, but you've heard my spiel and I'm tired of saying it, but it's true. So unlike March of 2020, where people dumped money in hand over fist, this time people are a lot more skittish. People are a lot more concerned that there's long-term problems out there in the market. The economy, I'm at an economics conference right now, 4 days of, we're at almost full employment. There's so many things to like about this economy, except for whatever you see in the mainstream media. So make your own decisions, but that's the share price history. As a reminder, distributions will start in 2025. So we're 3 years out from that, but that'll be here right around the corner. And again, I will manage us to be profitable at that time, intentionally running in the red until then. If at that point, if I decide that I want to continue running in the red, I'm going to put it out to all of you for a unanimous vote. Everybody would have to agree to that. I do see the genius now as we spend more money to grow. However, I get it. If you want your distribution as promised in 2025, simply dissent on that vote, and then everybody will get a distribution starting in 25. And as you know, the 831, the bottom note there, the August 31st of 2029, this formula goes away. And now it's just based off of open market price, direct to earnings. There's no 2.5% move on the way up. But all in all, I didn't talk about, we did move up a few $100,000. So 0.5% gain in May, obviously with a 2.5%, projected raise built in, then the share price, if it's not above 2.5%, marches backwards, and that's what you're seeing here. If you have any questions on the formula, then just reach out to me. Okay, projected returns and distributions. I have not updated this slide, and I don't really intend to update it till the end of the year, and then I will project out the returns. But all in all, you can expect an internal return of 10% plus year over year, at least through when the distributions start, and then it ramps up significantly all the way to 2029, where your return is pegged directly to the AUM. So pretty good deal. And the more I'm learning at these conferences on valuations and things, yeah, it's a pretty sweet deal. You may be unhappy in the short term, but when you start getting towards 2029 and see the power of this, then you'll be very happy. Okay, initiatives are out there. You know about the first four. There's a slight change there. We did partner with Zoe Financial. We're partnered with Smart Asset. I did convert a client out of Smart Asset. So again, if you remember, Zoe Financial is more of the 500K and below clients. The Smart Asset is million and above clients. So one of those did convert. We do have a partnership with David Johnson at Fortis Life Group, who's starting to gain some traction out there as we put everything in place that we need to for compliance as well as compensation. And then last one, we're not going with this Redwood Financial. I said Redwood Investments is the way to go. We had a mutual disagreement on things, so therefore we're going to use the First Trust models going forward. Kind of skipping to the next line, Joel signed on. Joel Hansen, very happy to have him on board, not only as an investor, but also as a W-2 employee, now financial advisor. He's Series 65 complete. I think he'll be initiating his CFP study shortly. But I've known Joel for a number of years, and I will expect, you can expect the best from him. He succeeded at everything he's done from a, investor early on, largely in real estate. I was his roommate in a quadruplex he owned back when I was 21. And of course, a full career in the military, retired 06, off into the defense industry, doing great things. And I would expect nothing less as he enters our realm here, as well as a financial advisor. But why I bring that up is as Joel goes out and starts building his business, again, we'll be largely using models and things as we go forward. Sorry about the background noise. I'm at the RIA Edge Wealth Management Conference right now. So therefore, we're learning a lot of things while we're here. Candace and I are both here. She's studying the operations side. I'm studying the investing side, as well as the economics of what's going forward. So very happy with things we're learning here. One thing is kind of funny. The new latest, greatest thing in investing is direct indexing, where you take a index and you crack it open and you only pick the best names out of the index. So, that makes me happy because that's exactly what we do. It kind of pisses me off though, because I did that 8 years ago, but I didn't come up with a name for it. Nor am I able to go on CNBC going, hey, look at this new way of investing. We've been doing this for almost a decade. We'll continue to do it. Glad that the rest of the investing world has now caught up, and good on them for taking credit, because who cares who gets the credit, right? But certainly that's your best way to try to achieve alpha, is not owning the whole index, but trying to own just the best parts of it. I said Top Gen event. That's a typo. Top Gun event was a huge success. Obviously, that was the Ankerstar Wealth event of the year. Thanks for those that took time out of their day to come out and watch the movie a couple days early with us. Great movie, great people, great event, great food, great venue. I don't know how I'm going to top that, but I do know that that's going to be it for 2022. So we'll start talking client events for 2023 starting early next year. I have not announced to the greater public yet about the top 30 fastest growing companies. There's an article out there about Ankerstar Wealth there, and then the continued growth as far as employees, looking to bring on at least one, maybe two more financial advisors this year, and potentially a CPA that we're in talks with. That could be long talks. Don't get your hopes up. This could be measured in months. But I do hope to have that CPA in place by the time we're in our building, hopefully knock on wood, in September of 2023. Here's the conference valuation thoughts, which is important because you know the formula I throw out there, and every now and then you may look at the formula and scoff and say, well, really, really you're valuing this company this way? And I will tell you that I'm more certain than ever that the company is worth it now after hearing the valuation teams. They have both the buy and sell side here. The folks with decades of experience, specifically in the financial space and in the RIA space, and the narratives are the same. We're doing everything, not quite everything. We're doing most things positive that we can. There's a couple of challenges. And again, it's always kind of good to know your worth. That doesn't mean we're selling. But it's good to know your worth, right? So the positives, they're using an 8 to 10 multiple of earnings out there. I use a 6 for the formula. So your shares are worth more than I'm currently valuing them at. I'll wait for the world to tell you that later on, but I think you'll look back and laugh and say, why'd you value it at 6 when everybody else is going 8 to 10? I like you guys. Like I said, the number one reason to invest in Ankerstar Wealth isn't because you're going to make millions. You probably will, but in case you don't, it's to be standing there when we ring the bell or we get the big payout at the end from getting bought. So they want companies, the buyers out there want companies that are in aggressive growth mode. You can't really get more aggressive than we are. With the budget we have, I could get more aggressive and start burning through money. I'm not willing to accept that burn rate right now. Maybe I will as we grow and the market recovers some, right? Digital and social media presence, I have that with Allison and I in the morning show. That's gaining traction, getting, have a kind of a steady cast of viewers, and every now and then we get a little spike in that. So please encourage, help your own money out, right? Point people towards that show. Tell them it's 6 to 8 minutes or 8 to 10 minutes of cutting edge material every morning. Try to get people to subscribe and watch it. Overall, that's going to be a big benefit for Ankerstar Wealth. They said they want to buy firms. They get the feeling that clients are like family. I think we do a fantastic job there of our corporate culture being that, yeah, I do care and I do treat everybody like family. And, you're not investing in anything that I'm not, unless you brought it to the table. They like companies to do customized portfolios because that means the client is sticky. The client likes that because you're taking the time to get to know the client and do what's right by the client. So I said that adds extra value. They like organic versus breakaway advisors. So what's the difference there? Organic, me, started from scratch, built this thing from day one, from $1 all the way up, versus a breakaway advisor that may be defected from Wells Fargo that doesn't really know much of anything other than I'm going to take my clients and go somewhere else and hope for the best. So we built this from the ground up. We have a culture. You've heard me say the same things, hopefully, call me out if I'm not, for the past 8 going on 9 years. And that's what, if somebody buys us, they would have to respect that culture and merge it into theirs, right? The founder and staff wanting to stay on for 5 years. I will tell you that the day the check comes or the day we IPO is not the day I'm walking out the door. Absolutely not. I'm in this for the long haul. It's all I've ever wanted to do. I want to build this. I don't necessarily want to run it on a day-to-day basis because I know my human limitations as well. I'm 52, so I'm not getting any younger. So this will take me up to around age 60 or so. And hey, I'm more than happy to hand that off at some point, whether it's a young gun or a wise old head that's around that runs the show. We'll figure out who's the best person to take us forward from there. But I'm not going away. I'm sticking around. It's got my name on it. I mean, come on. The average age of the advisor is 58. That makes me look young. What? Are you kidding me? Right? So there's so much money to be had out there, so many clients to be had, so much business to be had, so much services to be provided to people, and people need it. More and more people want an advisor every day, especially when you go through an volatile time like this in the market. It makes people rethink, should they be managing their own money? Hey, to your do-it-yourselfers out there, knock yourself out. I did that for 20 years. I look back and laugh now, going, how naive I thought I was, thinking I could do it in my part-time and beat somebody that does it full-time. You make the call. Last one, M&A multiples at an all-time high. No doubt, both of those are on fire. The whole space is on fire. We're not looking at selling right now, but if we were, the space is on fire, which is good, right? And there's just less supply out there as less people are going independent, and then they're getting snapped up left and right and getting paid. Right? We have no interest in doing that. What are the negatives out there? The fee model. I've cut everybody a better than industry deal as far as fees. So if I were to sell, I would have to find somebody that would either respect that fee structure, or we'd have to raise that with all of the clients, which means some clients would leave. Maybe none of them would leave. I don't know. I don't want that conversation. So that's a huge negative. So I would be asking somebody who doesn't have our fee model, which nobody does, cheapest out there, to incorporate that. And I don't know that I'm going to find somebody who's like-minded right there. And the last one, great companies aren't for sale. Do I think we're a great company? Yes. I think we meet all of the positives and more. So why would I sell? So really, when you hear this, where does that leave the situation or the conversation? Is that I really do think this is going to lead towards that IPO in 2029 or so, when we're right around $500 million. I think all the other players are going to take the short target, not all. I think a preponderance of the other players are going to take the short target and take the payout. And I think we'll hang it out there and go public. Again, I don't know what I don't know, but part of the reason I want two people to buy, 10% of the company and be immediately on my board of directors is because I want people with M&A experience and or the time and energy to make sure that we make the right move at the end game. I still plan to be, heavily involved in day-to-day operations at the end game. So if my mind is focused downward on the organization where it should be, making it the best it can be, of course, I need at least two sets of eyes looking above and keeping an eye on the exit strategy there. So anyhow, just a couple of thoughts there as we close for today. So all in all, I couldn't be happier with where we are. The share price is what it is. My apologies. I wish it would go higher, but I'm telling you that we are fighting the good fight. We have 4 of us basically, and now 5 with Joel, who will, start fighting June 1st, which is today, right? So start fighting that good fight as well. And that's what it is. It's a long game. Even now when prices are reduced, you bring new money on, you're getting shares cheaper, which when we finally, the market, undefeated all time at reaching new highs. So listen to that, 100 years undefeated, right? So you may be questioning yourself, but don't. We're coming back. US isn't dead. And the market will be back in new highs sooner than later, right? And we'll be happy that we were in this bathtub. So with that, if you have any questions, reach out to me directly as an investor and I will answer them. If it is a really super good question, in other words, I think everybody wants to hear it, I may say, hey, let's wait till that July 3rd meeting where we have the IAB meeting. For that though, I haven't had a lot of questions before. So if you're thinking of these, hey, let's get some questions in there so it's a little more interactive when we go through that drill. With that, thanks so much for listening in. Thank you for being an investor in Ankerstar Wealth. And again, proud to be associated with you all. Have a good one.